Good day, everybody. Good afternoon, everybody. It's afternoon as I do this here, but I will say that it's been interesting. I've been in, all the way up to say northwest Illinois and mid-central Indiana over the last week and a half, and I would say, look, things are a little bit dry. That's all I'll say. I'm not trying to get everybody bulled up, but things are a little dry. We had that short cover rally where the shorts got the numbers that they wanted from the USDA, but we didn't attract any new selling because there wasn't any new selling. We saw that market rally up like it did, and then it wanted to settle off like short cover rallies usually do once the dust settles. But you know what? The story of things needing a little bit of a drink is kind of playing through the market, so you're going to have to suffer through that. So now we had a technically strong gap higher open in corn. We made it through that $3.50 psychological level. I guess if you want to ask me where you think the next level would be on a rally, if we have a rally, would be 363, 364. That's going to be the 200-day moving average. Keep that in mind. Again, interesting to see those technicians like to look at that 38% retracement level, right? 25, 38, 50. Those are those levels we're looking at, and it's interesting to see in that D's corn market. We return to that 38% recovery of that move that we had all summer, all year, that 2020 move, that 85-cent move from $4.05 all the way down to $3.20. Interesting to see how that all set up. And again, these technicians, that's only going to embolden them more about where these big numbers are, and that's that 38% level, which is a big number if you follow those terms. So keep that in mind. That's something, again, a lot of the competition and a lot of your friends are trading, and if you need to know what those levels are, because we're going to see things naturally attract to those levels sometimes, and also you'll see volumes pick up. Again, that 200-day is up around 363, 364, and that will be the next big resistance, and that's around that 50% retracement from that big move I just talked about. So 320 to 364 is like 44 cents. Yeah, that's about halfway back from that 85-cent move that we had. So all of those are technical things that we have to keep an eye on. And again, the dollar is weaker too. I'll throw that in there. The dollar's gotten precipitously weaker, but it's just a tad weaker today. That'll also be a little bit of wind beneath the wings of the market. So these things are all lining up that way to be a little bit more of a constructive trade. I think that we're out of this short cover rally. Now we're just kind of looking at news and going into harvest, and this is not altogether uncommon. Just make sure you're covered either way. But these are the things that the trade is talking about, and I think that they're fairly important, and I saw them firsthand. So we'll see if this continues for the next few days. I'll be back with you in the next on Thursday. But again, constructive looking trade here, hot and dry-ish, but it looks as though that short cover rally is over, and we might just actually be suddenly starting to trade the fundamentals, which is nice and comfortable.